You're good.
Am I live?
Yes.
Okay. You guys bear with me as I get going on this. I got this thing. I'm missing kind of this piece of it, and I want to follow it all the way through because I there's something I saw in my setup that's very interesting. And it's a piece that I'm missing, and if I can get it, it changes this setup a lot for me. So I want to talk about this, but we'll go into it here. Okay, what is up, everybody? Welcome to the Russel Journal. My name is Russell. This is my journal entry for Thursday. What's today's date? Thursday, February 16th, 2023. All right. Interesting day in the market for me. Big up, big down. It very at the beginning up and at the end very down. And I've seen this before, this sort of thing before, where it comes in, spends most of the day up here, traps a bunch of bulls. It traps a bunch of bears. Gap right. If I go back here to this, I've seen this setup happen a lot. Right. We can go back to the beginning. Okay, so you get this gap down into the morning, and then all was followed by this point where we fill the gap, and then you go to the end of the day and there is a sell-off. And so as far as this goes, there's really two solid trades in here, one right in the morning and one into the end of the day. And this is a typical thing that we see around this time of the month, or that I see around this time of the month, where you get close to options expiration. Right here, they've suckered a bunch of people into calls, then they tank the market. Those calls are worthless. They sometimes it's been referred to as a liquidity trap. That's something that's seen. And I can go and show you this diagonal line on a daily chart represents that, and we'll go look at it here at the end. I want to look at this. It represents this triangle that sort of is happening in the market right now. And one of the things I will say about it when I go there is, once I typically see those triangles, I tend to stop trading. Normally, before any of the changes in trading behavior that I've had in the last 2.5 months, before any of those changes, even then, this was something that I got. So it was Thanksgiving of 2021. The day after Thanksgiving, I traded that Friday, that Black Friday. I got caught in one of these triangles. I couldn't get out. And that was when I learned about this, what they call a symmetrical triangle. Now, I don't think this is a symmetrical triangle. I think it's some other type of wedge. Doesn't really matter. But we'll go look at that. Right now, what I want to focus on is this piece of my setup that I seem to be missing. Now, what I did do this afternoon, I tried to take a trade right here. Okay. This is the 50% retracement. This line here is the 50% retracement of the bear market. 409.70. It's almost to the nose. I'm sorry if my hair is right. What I looked for in here was a chance to hold support. It broke up. It broke up here. Again, you can see too that it followed a lot of my trade setup. We came up, we started coming out of the oversold condition, making a move back towards the 18-period moving average. We didn't quite get there. We came back, we broke below, and that took me out of this trade. So, but what one of the things that I noticed here is that I could have gone to some of the other time frames. I could have gone and looked at some of the other time frames. This is driving me nuts. I'm gonna have to fix this. See if I can. There we go. That's a little bit better. We'll see how that goes. Okay. So I was looking on some of the other time frames on this. God, that's even worse. Okay. So I'm looking at some of the other time frames on this, and we might just have to get rid of me. That might just have to be gone.
You look like a Terminator.
What was that?
You look like a Terminator.
I know, it's bugging the hell out of me. That is my producer, everybody. She is um, making sure I don't have a self esteem. I believe that's her job.
No, that is a really good one because you look like a Terminator now. I love it.
It's not good. Nobody likes this. Um, Maybe I can just turn off the light. And that does that one. See, it's this new camera I have. It really is not good. Okay, whatever. You guys aren't here to watch me fiddle with this stuff. So I'm going to have to just be.
Keep going.
I'm a ghost.
There
Ooh.
you go. That's better.
Okay, that's good enough, right? Okay. All right. So stepping back. All right. Wow. It's just horrible.
It's okay. We'll
What?
fix it some other day. Just
All
continue.
right. So, all right. So going into this, okay. So here's the thing that's funny, and this is what I noticed on the chart. If we go to some of the larger time frames, right? Okay, so you had the first of all, let's go back to here where we had the breakout of the overbought condition, right? You broke out of that. That would have been your short, by the way. I didn't take that short uh, because we've been up all day. Okay, uh, you've come out of there several times throughout the day, and every single time you get bought up into, you're getting bought up into this. And so the idea that you would short that is utterly asinine. Uh, it's ridiculous. Anyway, okay. Um, so the idea that you would short this from a break of the 1 minute, okay, that's something. Now, here's the other thing. So if we go to the other time frames, this is something that I've noticed was that so if we go to the 2 minute, right, you lose. So on the 2 minute, you lose. Let's see, you lose your overbought reading right here on the 2 minute. And you get to that 18 period moving average here, and you try and bounce and you sell off again, right? And so you kind of keep going down on the 2 minute. And the point that you actually get to oversold, which is right basically here, right, which is where I did go long, is for the move to try and catch. And on the 1 minute, I was leading it on the 1 minute. It came out of here. But then you can just keep following the momentum down, right? Because the 3 minute broke down and it just kept breaking down, kept breaking down, kept breaking down. But again, you can see where you wouldn't want to do this because every single time it falls out of overbought, you get snapped back up in the other direction, right? This one you're trending up, you break out, you come down here and you're only right here, right? Your move isn't that far. This is a 3 minute time frame. But there is this point where with the momentum, you can keep holding as it keeps going and you can keep following this. There's your 5 minute, gave up overbought, started to go down. Go to the 10 minute. 10 minute gives up overbought. But by the time you give up overbought, you're already down here, right? You're coming into this support zone. So unless you're like willing, if you call this your swing low, unless you're willing to short on a break of swing low there off of the 10 minute, that's the only way you could probably catch that is the break of swing low. That would be the only way, but you can follow this completely through as it comes down, right? It just keeps coming down. The 15 minute finally breaks, but by the point that the 15 minute breaks, you're all the way down here already, right? So you're in this point where like you can follow, I can tell you can follow these moves down. You can follow the break. There's the 20-minute. The last point where the 20-minute broke was from here, right? And it just corrected to down here at open. This was from the close of last night. This is the correction down. You get the rally back up all day. And then all of a sudden, this straight drop here, right? You're on the 20-minute coming into the end of the day. And so, like, there's this part of me that is beginning to see that, like, somewhere there is a balance, right? Somewhere there is a, right, to go short off of just a break of the 1 minute, right? To go short on a break to the downside of the 1 minute didn't really work, right? The only thing that where you could have done this from is that swing low right there. And again, every single time it's pulled back a little bit off of one of these highs, it's been bought up. So it's really hard to short this. So I am looking for a place where I can go long, right? But most of these indicators, most of your technical indicators on your larger, your stochastic here on this larger time frames, the only one that this 30-minute didn't make it to overbought or oversold. It didn't make it into below 20. You're right here. You're still holding up, but you're still trending down. There's your 2 hour, right? Now, this is the thing that you can see. You can see your triangle sort of start to happen from right here. This is the thing. Everybody wants to talk to me. So here's your triangle from here. Again, what happens with inside of this kind of wedge as it's happening is a great way to get chopped out because you can see it doesn't, like, first of all, your move to the bottom end is here. There's a whole big bounce up before you get the move to back into the trend. You get a move up here, and then it's this sort of swoop into this, right? So inside of that triangle, you really don't have any power there. And they're free to knock it around however they want to. And as long as they keep it off of one of these. And if you're trading contracts that have like really short expiration, it doesn't give you a lot of time to compensate. So you've had to play with really tight stops. I've had to play with the really tight stops. The good trades I've had some bad trades in this. I've had some bad trades in it. And the other thing is, like, okay, so this one, you got the breakdown all the way to here. I was holding calls through from this point here, right? This creates this point here. I'm holding calls from here, looking for a reclaim. And this isn't today. This was last week. And it just keeps going. I had no way of knowing that this was going to be a stopping point other than, oh, maybe that peak right there could have been like some type of support. This could be considered the resistance of the breakout zone, that this would be some sort of support. You really didn't have any idea. I'm looking for a bounce back in the other direction, especially as strong a move as this has been upward. I thought there'd be for sure somebody coming back. And that was last week. Again, that was a long time ago. Now you're into today. You get the bounce up into the top of the trend, into the top of the triangle, the pullback. Again, this is really annoying. And I think it's the light from the window. I have a window right here. It is the light from that window. And so unless I figure out how to block that light from that window, or I change back to the old camera, which I might do. This is ridiculous. So, all right. Anyway, so again, really sorry for that, guys. Really sorry. So you've got this pullback here into this, and then the bounce up. Again, kind of creates this sort of triangle. It's not exactly a symmetrical triangle, anything like that. But typically what I do know is once I see this pattern, I typically know not to trade to stay out of it. I did trade that one today, looking for a rebound back to the top. Again, stopped out, was not a win, but it's okay as far as I'm concerned. But it did reveal to me this point that I'm missing where I'm missing the follow through of momentum. And you can actually go as far as the 30-minute. No, you gotta go back. We can go to the 10-minute, right? Here we go. This is where you can see it. You came in here and off of oversold, you got the breakout and this move up. And I traded this. This was a good trade. This was a very good trade. I actually got off of the 3-minute, when the 3-minute broke out of the oversold this morning. I went long, caught the move up into here, pulled back. It was a little $60 win for me right there. It started to pull back and flatten out into this. And as far as I was concerned, the trade was done. I didn't know you're going to get the rest of this move up into this area here. And you can see too, you didn't even make it up here to the top of this trend line, right? You didn't even make it that time. So that's the stuff like, and you can see too, the other thing that's really funny is you kind of stopped and you broke down. You're a little bit below this trend line, not very much. They can snap it back up into that, So again, none of this is really I'm not saying this to be predictive. I'm not trying to be predictive here. Okay. We need to be very careful not to be predictive. What I'm saying is I could have followed this through, right? This is the 10-minute chart, right? I could have moved through the momentum all the way into here, and the momentum doesn't start to break till, right in here, right? You got your move up into here, and then your momentum starts sliding back this way. There was probably, I had the 412 calls here at about 50 cents, and up in here somewhere they were worth over like $1.60. So it was a very good move to the upside, but I'm missing this part where I can follow the momentum through the timelines. And I've been trying to do this, and I've had some struggles with it, but following that momentum through those timelines, and some of it is really difficult. One of the areas where I'm getting some difficulty. I'm going to shut that off. So one of the areas where I'm getting some difficulty with this is that options don't follow. They're a derivative of the market, right? Of whatever it is you're trading. And so they're this derivative, and there, that's good. That makes me a little happier. It doesn't make me better, but it makes me a little happier. Okay, so there's this derivative of the market, and the thing with the derivative there, right? The problem with that derivative is that part of it is based on the possibility that they're going to be worth something, right? So that's called extrinsic value. This is what somebody's willing to pay because they believe it might happen, right? This may actually happen, okay? So what tends to be the problem there, what tends to be a real point of struggle for this is that even if the market continues to trend in your favor, right? So this is what happened on my call call position this morning. Okay, I'm in it at 50 cents. Okay, we move up all the way through. It's at 60 cents. Okay, the market moved from 409 to 410 and a half. Now, from 410 and a half, it pulls back to 410. Well, that 50-cent move back, I caught $1.50 move up, but I caught a 50-cent move back. And that 50-cent move took me from being green on that position $100 to being green on it $50, right? And so I put my stop there at the $50 mark, and it stops me out. Well, even then it pulls back and it bounces around at the 410 level a little bit, And the thing that happened there is, even though I entered the position, I paid 50 cents at the position, even though the position was $1 further from where I bought it. At $10, when it was hovering around $410, it had pulled all the way back to my 50-cent entry. Okay. So the price from where I bought it in the index was going up, but the price of my derivative, of my options, were coming back down. So I stopped out there at that $50 gain. And the thinking there is that I don't really want to make the same money twice, right? From there, we exploded up to 411, 411 and a half, 412. And this is where those contracts got worth more money. Where I think I can capture that extra money I'm leaving on the table tends to come from following or understanding how the market moves from time frame to time frame. When momentum comes out of the 5-minute, what happens? When momentum comes out of the 10-minute, what happens, right? How does the price behave between losing the embedded oversold reading on the 5-minute, between the 5-minute and the 10-minute, right? How does it behave between the 10-minute and the 15-minute? How does it behave between the 15-minute and the 30-minute? And this is where I have trouble, is between the 15 and the 30. I tend to really have a lot of trouble between the 15 and the 30, because there's a whole 15-minute time frame that anything can happen that may say whether it's going to get in or out. And the thing too that's really fucked up about it is that by the time the 15-minute is out of overbought, right, is coming up out of overbought, the 1-minute is already, or coming out of oversold. I'm sorry. When the 15-minute is finally ready to come out of oversold, right, the 1-minute is so far overbought that the algos that trade on the 1-minute are starting to try and push it back down. They're starting to take their profit. They're starting to sell off. So getting the follow through all the way through the 15-minute to the 30-minute is a struggle for me to sort of wrap my head around how that price action needs to behave, right? And it's the same thing. By the time you're coming out of the 15-minute, the 5-minute's already overbought, right? So a lot of times where you have on the 5-minute is that you're coming out of overbought, and that can kill your momentum on the 15-minute. So it can stop it, or it can, and it can even really stop your position. It can really stop your position on the what do you call it? It can stop the position you have on really hard on the if it's not the one the what is it called, the your options momentum, right? Your options momentum. So if the 5-minute comes out of overbought, but the 15 comes out of overbought, and the 15 is coming out of oversold, it's going to do this little haywire thing where it could wipe you out really easy. I've had a few of those happen. I've been trading with stop losses and sort of trying to follow those stop losses under the 18-period moving average of my derivative. But so far, that's still causing me to leave massive amounts of money on the table. So I'm not entirely sure how to sort of process all of this. I need to think about it. I need to look at it some more. I'm going to probably paper trade it a little bit to see how things behave, how things act. One of the things that's tough about this, though, is I'm in a market that's not exactly trending. Our market is, for all intents and purposes, sideways at this point. It's building momentum for a move one direction or the other. And there's a few other things about this that are really tough for me. Fundamentally, there's not a lot of reason to continue to get long into this market. After the PPI data we got this morning, it's really hard for me to think that investors really should keep wanting to buy this market, keep trying to drive this market higher. The idea that somehow we should end the bear market should come out of that. does seem a bit weird to me. I'm not saying whether it will or whether it won't. The market really doesn't care. The chart is the chart. I want to say that very clear. But mentally, there is a bias for me because the news is bad. It's bad news. PPI was up 7% on producer prices this last year. So the idea that inflation is over, we had a really hot CPI report, you had a really hot inflation, and you've got really low unemployment. The picture of stagflation is really, really, really becoming more and more clear. And it could take a while to deal with that. So I don't see how we keep making these moves the way we're doing. The only other thing that I can think of is that there's one reason I can think of why somebody would want to buy stocks, and that is if you believe something bad is going to happen to the dollar, where the dollar is going to really lose a big chunk of its value. That would be a reason to buy stocks, I would think, in a way. But even then, I think that that's really, really rough as far as things go. So it presents a very unique challenge that overall, again, really managing my risk, not getting in position sizes too big, not playing with tight stop losses. That's what I'm doing right here. It's not really super profitable at this point. And then on top of that, I am coming off of some like emotional damage that like has sort of not done well. I'm very happy today that, I feel like I traded very well as far as I'm concerned, as far as my setup goes, as far as managing my risks and things of that. I feel like I did a very good job of that. To the best of my ability, I believe I did. I think that there is something I can do that will allow me to capture that extra money I continually leave on the table. And I think where it comes from is really following that momentum through onto those other time frames. Really where and what those key time frames are is really, that's a lot of the challenge is like, should I even bother trying to take a trade of momentum's coming out on the 1 minute? Is that really valuable? Am I, if momentum's coming down on the 15 and momentum's going up on the 1 minute, is that a no-go? Is that a, hey, this isn't my setup? Is that something in there? I don't really know, right? This is a piece of something that I am really missing. And I know that it's missing now, right? I'm to the point of where I have learned something that I didn't know. And now I'm sort of seeing that here. Again, not that again, I followed my setup, but this little new piece of information could have just stopped me from bothering to take the trade altogether. And at the same time, it also may lead me to a point where I can understand better, like I said, in today's price action, every pullback got bought up. There was a point there when that stopped, and I could have shorted, and it would have been my setup, right? But I don't know where that exactly. And I know that the one thing I do know is that those time frames were what led me to it, and I think I just figured it out. But I'm going to have to do some research on it. So again, this is just technical side. There's still a whole emotional side of things that I am trying to deal with. I am trying to not let fear take over. So I am trying to be in this a little bit, take on some challenge, take on some risk, but keep that really tight and affirm to myself that I'm not an idiot. I can perform according to some preset disciplines. I can have those things. So there's a lot of that I'm really considering. I'm really thinking about. I'm really considering. Let's see if anybody. No, I haven't. So first of all, Nick is in the comment section. Everybody say hi to Nick. The Nick asked me if I've back tested it. I have not. I for the first time really noticed it today. Is really where I first noticed it. This is something where I am seeing this. I am seeing this point where there is for momentum, where momentum falls out on a lower time frame, but is coming up on an upper time frame. I've noticed this a little bit before, and it's given you the momentum to for those pullbacks to continue to get bought. But then there's a point where it falls out on a lower time frame, and then it keeps following to further and further time frames. And anytime, like I said, you go to the 1 minute and it fell out, it came into an area of support, but momentum on like the 15 and 20 minute was coming down. And so the momentum on the later time frames killed the rebound, right? There was no rebound off of that because momentum was lost on those other time frames. So there's a bit of this where I think there is a key time frame that you need to be watching this on, and I think that is what's up. I don't know for sure. Yeah, so yeah, I agree. That's what I'm saying. That's kind of the whole point of this video. So Nick said that I need to not trade until I've back tested at least 20 trades minimum, and can see the edge, have the rules based on them, and have the strat on them. Yeah, that's basically what I'm saying. Is like I'm coming in this point. I'm going, hey, I've learned something new that I didn't know, and now we need to stop and figure this out. Like that is it. Is like it doesn't really matter. Yeah, without that you're just guessing. Yeah, I'm not explaining to anybody how to trade this. This whole thing is literally is literally this is just what I noticed. I saw it today, I'm presenting it here, and what I'm going to do in the future here is really look at this. And again, it was that one trade I took where I saw that, where it didn't rebound, where it went against me, and again I stopped out, small loss, not a big deal. But the other thing too that I saw it earlier in the morning when I stopped out for a profit. I gained $50 on that one trade, and it and you could have followed it through on the later time frames as it continued up. And so I don't know where those are, right? And where the longer time frame momentum takes over for the shorter time frame momentum, right? So that's and I think if I figure that out, I think that really sets me up to be more on the right side of a trade. Not that, and again, two, you're really tough because you're in a sort of sideways, untrending market, right? You're really bouncing between 408 and 413, 414 at the best. I think we got to 412 and a half today, 412.8. So you're really in a very tight range market, and it should be. I think it's going to keep closing in at least until OPEX tomorrow. I've seen it do this before, where the OPEX it tends to stay relatively flat or go up for a little bit in a day and then sell off into the end of the day, trapping longs. The other side, I've seen it do it where it goes down and then bounces back up to trap shorts, right? And this is sort of how option sellers sort of this is something, and this is pretty common knowledge in the options market. This is one of the tricks that they tend to do in order to make sure those options all expire as much out of the money as possible. So try and keep it flat right in there. I would not be shocked, and again, this is not meant to be predictive, but I would not be shocked to see SPY close 410, 411 tomorrow. I wouldn't be surprised just to see those things come out. But that's neither here nor there. Yeah. So without having the understanding of this, I need to get. Okay. So the one other thing I want to say is what I need to get is a variation of ranges in this. Right. This is one thing and this is where it's going to be really weird is, and I'm probably going to do some thinking on this weekend and come up with it. We have a 3-day weekend this weekend, by the way. There's no trading on Monday. So this will be a really good weekend for doing this research and doing some homework on it is maybe I'll pick 3 to 4 variations of time frames and backtest it through the weekend as to momentum going down here versus it going up here, right? Where are they not working together? And it may simply be a point where my setup may not work if you have an overbought. Let's say you have an overbought 15-minute and you have an oversold 1 minute. It may not work, right? That may not. There just may be one of those things where it's not a no, where it's a no-go zone. But I need to back test this and see it, right? I need to back test this and see where those time frames match out. And one of the things I want to avoid while doing this is I don't want to go from the 1 minute to the 2 minute to the 3 minute to the 5 minute to the 10 minutes, right? Like just right. At one point, you're going through so many charts so fast and you're looking at it that I can get confused. And I've done this before. I did it before when I was trading penny stocks. I had a problem where it's too many charts. There's too many charts, and so yeah. So basically, Nick is saying here, if you focus fully on just one edge, shut out everything else, stop looking at the overall market, etc., and do that for the 6 months, you mastered that edge. I agree. I think where I'm at with this, where it feels like I'm at, and maybe you can comment on this, Nick, is where does that edge work? Where doesn't it work? Right? Look, I can show you on the 1 minute chart today where it came out of overbought and went to the 18-minute thing in the downward movement. I can see that. I can tell you where it did that. It worked, right? On the 1 minute chart for all of like 4 minutes, right? But it wasn't enough to get me anywhere where I could take a profit, right? It was right. And there was no follow through with that at all. So in a way, it worked. Now, my stop loss is there, and that's what it was there for today, to prove it didn't work. And so what I think is I can hone this edge to where, by understanding the balance between one trade and another, where it didn't work. And that's just as an example. It's like, hey, this is not going to work here because of you've got one going against you and one going for you. This is a not tradable situation, right? So I have that. I have pretty much all of that, except this is the one piece of information that I'm trying to bring to explain that I don't have. So yeah, that's that. I agree. Like, it's just something I've really noticed, and really noticed it today, where I, and again, it's just this piece of information. I think if I have that, like I said, had I had it, I would have known that was a short position, not a long position, and I would have gone on the put side of things. But like I said, and the thing is this is where I'm beginning to see, this is how I'm starting to see, like, this is or isn't working, or that you're gonna have the change, right? This is the reversal, and that is a lot of what the stochastic sort of setup is, moving out of that to the 18-period moving average. That is I lost my thought. So Maria says she tries to average down. You're not going to get a lot of guys that are going to back you up on the average down, Maria. Trading rule number one is never, well, one of the top 10 trading rules is never average down. Yeah, yeah, yeah. Oh, she'll figure it out. It'll prove. Uh, it averaging down usually doesn't work. Usually, it screws you over really hard. If you figured out how to, I that's something I thought was really funny. Is there's a group of traders that they accumulate through the process of averaging down and then wait for it to make the move. I'm not sure how that works very well with options. Averaging down tends to hurt. So again, basically to Nick's point, where I am is that I'm going to stop. I'm going to take the weekend. I'm going to back test some different setups on the different time frames, some variations of time frames, and I look forward to sort of telling you guys how it goes. Like I said, I think there is something to be gained here. I think there's something to refine this edge of mine and make it even better. That's what I'm trying to get at. I agree. So accumulation building is different than averaging down. So if that's what you're talking about, Maria, if you're talking about accumulation versus averaging down is that's sacrilege in the world of trading. That tends to be considered just horrible. Yeah. So like accumulation is one thing where you're building a position for that move back in the other direction. But if you're like, well, I'm in at 100 and it breaks to 99, well, I'll buy some more at 99. We'll see how it goes, right? And it keeps falling and you keep averaging down. That's how traders tend to blow up, right? They're pyramiding in the wrong direction. How long do you do that for? Well, it depends. I have some friends that they started and they were gonna accumulate, they were gonna trade, and then they changed to accumulation. Then it turned to averaging down, and now they're just dollar cost averaging in. Right? They've gone from being traders to investors. What is the joke? When does a day trade become a swing trade? Right? When it goes against you, it just keeps dipping. Yeah, that makes it harder. Zero DTEs. I haven't figured that one out yet. The accumulation of 0 day to expiration contracts. I haven't figured that out. I will tell you, I have switched from 0 day to zero DTEs to so the way my trading day is going right now, if I'm trading I don't trade the first hour. And the reason I don't trade the first hour, especially on zero DTEs, is the premiums go wild in that first hour. And if you pick the wrong direction, that first hour loss of theta, it will adjust for theta in that first hour. And it can clip you in half just from theta decay, even if it's going in your favor. Even if your calls and it's going up, but you're out the money in that first hour and it doesn't go, it will cut you in half. And so like the other thing too is if you want to play closer to the money, usually in the first hour, in order to even be able to afford them at a reasonable price, like at 20% of my account, you're at you're 5 to 6 strikes out right away. So I don't do that. And then you've got a 3-hour window in that first 4-hour candle where you can trade those 0 DTEs. And then after that, if you're going to trade them, you got to be in. I've noticed you got to switch one day out. If you're not in it by the end of the first 4-hour candle, you're done. You got to switch to the next day because they'll just burn you in theta. That they'll just slowly grind it even in your direction, and you'll get screwed. I experienced that a couple of times this week, is where like trading a little bit further out. Yeah. So shout out to Nick. Nick is also a YouTuber. I don't know how long he's been doing it. I saw he did a video where he talks about emotions, emotional distress. And I'll give you a little quick comment on that. So in my 20s, I went through some serious depression. I went to therapy for a while. And one of the things they talk about in therapy is the idea of trauma. And this is something I sent to you, is that and trauma is a very interesting thing at the educational level where, and this is what was explained to me. There's good traumas and there's bad traumas, right? And the problem with trauma in general is it leaves this sort of emotional reaction to the world, right? So something bad happens to me, I may emotionally react fearful. Something good happens to me, I may just be irrationally positive, right? And that like you can have these variations within trauma, and that lead you to make decisions one way or the other way. If you look at like even neuroendocrine things like serotonin, right? Like a sustained period of losing will lower your serotonin to where it will. Lowering your serotonin is your body's way of trying to get you to stop doing the thing that is hurting you, right? So like in the wild, if we're two wolves out there and I fight you and I lose, right? My body goes, I just got my ass kicked, and it drops my serotonin levels. And now because I have lower levels of serotonin, I as that dog, I would never have the ability, the willingness to try and step up and fight the alpha again, right? And so you can actually, I think the same thing can kind of happen with trading, is that you suffer this long sustained period of losses, especially financial losses, and eventually you just start reacting based on fear, right? Even if you continue to trade. And some of that stuff that happened to me was that this last week is 2 really big losses, and all of a sudden now I'm making these trade decisions based on wanting to get that back, right? And so I don't remember everything that he talked about in this video. He had that one graphic of the guy and showing the different emotional states. I believe I remember, kind of on this, put me on the spot. Yeah. I watched the one on the emotional stuff in that this morning. So probably need to go back and review that too, because I don't remember everything you said about it. But it did remind me a lot of that trauma conversation I had. So anyway, guys, this thing's gone on for a very social media shows want to ask me about theta and theta decay around every 30 minutes. So that is something that I think happens, especially for, okay, let's say you're long and you're going to diamond hand your long position and the market just keeps going down. So like every 30 minutes that you don't get a move back in the other direction, yeah, I think not only are you going to lose premium, right? Because you're going to run out of bidders. People are not going to buy when things are clearly going in the wrong direction, right? So you don't have any bidders to build up the extrinsic value, and so the theta just keeps grinding as it grinds down and grinds away. That could be every 30 minutes. I experienced it. I was in one back in December where I even by the time it came back around and I was at the money by the end of the day, and the theta had eaten so much of my premium there was nothing left. And yeah, so it probably does happen. I would say it could happen every 30 minutes. I think it can even happen every minute that it doesn't. I don't know. Like I don't think, I'm not an options dealer, so I don't really know the math on how the algos dump the prices on that. But yeah, the last day, if you're not where, I'll tell you where I've gotten around worrying about the theta decay and not wanting to get trapped in the theta decay is if you go to the Webull broker, you go to the options chain, you can right click on whatever contract you're trading, and it'll pull up a chart of the price action of that option. So if you buy, you're the call, you're watching the here, I'll pull one up right here. That's not you. Yeah, here's the 413 calls. Is this the 413 calls? Let me pull one up. Here, I'll pull this one up. You can see it. That. Oh, let me just click on this. That should bring it up. There we go. That's not it. Trying to see if I can get it. There's a PC broker. Yeah, I can't find it in here for some reason. Where it is, it won't bring it up for me. There it is. Got it. So you can see behind me, this is, so getting it on Webull's easy. You just right click on whatever option from the chain you're on, and it'll give you the option to scroll down and pull up the chart. This is a chart. This is the, this right here is the 408 puts for tomorrow. And you can see, right, there's this huge march up here. And you could even sort of use, where is this? So this is from days ago. This is probably today's trading right here, where you can see it came off of that. Yeah, that would be it. So you're at this lower Bollinger Band. You come off of it. You go to that, right? And then you start to kind of keep going up right there. And yeah, so you can see the chart of this. And like here, this is where like you kind of keep an eye on how they're trading this and the activity it has. And you can, I know guys can use this to spot reversals in the market. If you're watching, like, I know a lot of guys will have like a four, like, they'll have one call on one side and one put on the other side. And when the put starts to get a bid, if you're going up and the put starts to get a bid, you'll start to think that that's where you're going to get a turn in the market, or the other way around. Now, again, none of this is my setup, and this is just points of conversation. It's just a point of order. It's not meant to be anything other than that. But what I will tell you is, if you are worried about theta decay, and theta decay is something that's killing you, using the chart, I have gotten a lot of advantages from using the chart of the option I'm trading. It is a pain in the ass because if you click on any other option, like just directly click on it, it will switch this chart to whatever option you're looking at. Okay. And it will throw everything out of whack. The other thing too is setting up your indicators on these options, on this chart, is a big old like it doesn't have them automatically set up just the same as you have on your chart. You have to go in and put these on every morning. The other thing too is you do have different time frames down here, and you have to go every day. It will have the 1, 5, 30, and the daily. It'll only have those four. So you have to go into down here, and you can click on this little arrow next to the, for me now it's on the 15-minute, but if you click on that little arrow right there, it'll bring up, and it's not showing it here that it's bringing up, but you bring that up and you have to add those every day. So in the morning, when that first hour I'm not trading, I'm usually setting up my options thing. Now, the good news is if I want to change something, if I want to change the calls, it will work where this will trade. All right, now you're looking at the calls, right? At the money calls right there. It will automatically bring that right over to you. And then you don't have to change. All the times are the same. Your stochastic's the same. I've been using the MACD to kind of gauge the strength of a move. I'm not really using it. It doesn't have a buy or sell signal for me anymore. The MACD is typically overcooked as far as I can tell. As far as too many people know about the MACD. So it's too easy for a lot of these guys to set up fake outs using the MACD. It's very simple for them. However, this histogram that runs through the middle does give you a gauge as to kind of how strong a move might be. And so the other thing too is when that move is starting to lose steam, the change in variation of the histogram gives you a little indication. That, again, it's not a really big one. I keep it on there to be honest with you, I normally don't actually have it on there. Like every once in a while I put it on, turn it on or look at it. And a lot of times, sometimes, I don't know what the thing with Webull is, but they'll, a lot of times if you pull up your chart, the MACD will already be added to it for some reason. I guess they love the MACD. So, but it does help with the gauging of a move. The histogram is really good as far as telling you whether you're going to get. So it's called the H profile, where stock will come down, it'll bounce, it'll hit close to the 18, and then it'll come down again, right? You'll have this straight move down, and then it'll bounce. So it looks like this H, and then in that H, bottom of the H, you'll have that double bottom sort of thing. And you can usually pair that move with the MACD if it's going to happen. Normally, it's easy to tell when it's not, because when it comes down, it bounces, it goes back to this is your swing low, it'll break down below that swing low. And so, but the MACD, if the MACD is starting to roll over when it comes in, there's a good chance it will hold, and it's not. But if it's way far apart, if the MACD is way far apart, chances are it'll just keep going down. Again, just a clue, it's not really anything that confirms or denies anything for me, other than just some stuff like that. So anyway, I'm going to wrap this up, guys. It's been a long show, been a good show. Nick, it was good to talk to you. Maria, best of luck with the averaging down. Think more about, we need to talk more about building positions, I guess. She's been making more money than I have lately. So anyway, for the Russel Journal, I'm Russell. It's written, edited, hosted by me, Russell. I just said Russell like way more times than I meant to. What do you call a guy with no arms and no legs laying in a pile of leaves? Russell. So there's your dad joke for today. Anyway, Russel Journal is produced by Social Media Shows. Executive producer is Maria Pereza. By all means, Maria, we need to fix whatever it is I'm doing wrong over here. So, and until tomorrow, pretend I said some type of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget our very own Meryl and Merrick comedy show. This fun, comical TV sitcom duo with Social Media Shows Network loves to make you laugh. Mahel Empire Productions. It's a filmmaker based in Las Vegas, Nevada. Founded by Michael and Sonny Mahal, and are dedicated to making feature films. Turn your power on with Broken Bulb Productions. Owned by Russell Rapp, an independent filmmaker based out of New Jersey. This show is brought to you by, let's not forget, our very own GI Connections. It's a non-profit organization that connects veterans with resources. We're also proud to recognize Prolific Arts with Sonia Scott. Painting is the expression of emotion and feeling deep within one's heart. Let's not forget Matoma Environmental Technologies. Global research, development, and manufacturing of innovative photocatalytic products. Our show is also brought to you by Carmelo Rodriguez, who is the author of a best-selling book called Smile. It's based on true events. It's the story of a couple building a family. Get your copy of his book at Amazon today. We also love our musicians. Think about Frank's Tribute, an all-star band. It's a Green Bay-based band with Let Me Be Frank's Productions. Family owned by Frank Hermans, who happens to be a veteran entertainer.
Welcome to social media shows. Have you been watching social media shows recently? Of course you have. We have been live streaming for 4 years across social media platforms. We produce over 70 shows with over 1,000 episodes. In the process, we've helped over 100 creators realize their dreams and start their own show. We give platforms to promote your business. If you are an artist, if you have an event, if you are entrepreneurs, or if you have a story. If you haven't done it yet, go ahead and subscribe and follow us on major social media platforms. And if you have a great idea of a show, join us. Social media shows can help you produce and live stream your own show. Let us help you make your dream become a reality.
Hello, everyone. This is Joseph Skoda with Social Media Shows. Well, I thank all of you for your support through these last several years, and it's been a lot of fun. We've given people a voice they never had before. Now, Social Media Shows is always collaborating with our veterans to help them do things and help out the veterans who are struggling today. And we teamed up with GI Connections, connecting veterans with resources. So please consider helping and donating to this great cause because we're always doing things for veterans. So GI Connections, Social Media Shows, and you is what makes the world a better place. Once again, Joseph Skoda, proud United States Air Force veteran.